Introduce Mr. Anil Agarwal, SAP Consultant in Functional Domain of Sales and Distribution Module, Billing, IBM India. Sir is a senior IT professional with over 28 years of technology and capital markets experience working with global IT and consulting organizations and providing services to leading investment banks and financial institutions worldwide. Sir is Executive Managing Consultant in IBM's Banking and Financial Market Center of Competence. Sir has been associated with Capgemini, Citicorp Software, and Tata Unisys. Sir was also a member of Technical Advisory Committee of SEBI, Capital Markets Regulator in India. Sir has pursued his bachelor's degree in electronics engineering from Indian Institute of Technology, Kanpur, and pursued his MBA in finance from Indian Institute of Management, Calcutta. Sir, now I kindly request you to please come up on the podium and share your words of wisdom and knowledge and enlighten our young aspiring student managers.
Okay, this is a session for the finance students. It will open the window of their minds.
Hi, good evening. It's my pleasure to be here and share my thoughts in terms of what are the trends and challenges and opportunities facing the banking and financial markets. I spent 30 years in this field and always worked at the intersection of IT and banking and financial markets. Can you get my glasses there? So if you look at the banking and financial markets, I think what are the challenges there? As you can see, the global economy is changing. We have seen things like the subprime crisis. We are undergoing the Eurozone crisis. And all these are affecting the banking and financial markets very deeply. Banking is no longer profitable as it used to be 3 or 4 years back. The trust of the investment public is much lower. See, any business requires two things. One is the value creation, the second is trust. And today, on both accounts, the banks fare very low. And there's a need for increased regulation. Banking is becoming very competitive because the interest rates are very low, net interest margins are going down, the fee income is low. And the clientele is changing. The clients are changing. Today, it's no longer the clients who would like to go to the banks, the branch office, or anything. These clients, the Gen X and the Gen Y, are more comfortable working with the Twitter, the social media, the mobiles. So the banks have to adapt to this new clientele. And the increased competition. The competition can come from anywhere. I mean, you know the industries which have changed, which have completely vanished. When you talk about media, we talk about travel, the industry is totally different. And the same thing is going to happen to banking also. Somebody said that what's the need for the bank? Today, probably the internet can bring the lenders and the borrowers together and completely make the banks irrelevant. So banks have to find how to keep themselves relevant in this competitive environment. And the competition can come from anywhere. Today, the competition can come from, for instance, the telecom sector, the mobile banking. Telecom sectors are trying very hard to dislodge the banks in their positions. The competition can come from anywhere. And as I said, the banks, there have been lapses in the banks. And they have lost their trust. And they are there to be blamed for that. We know about high-profile case of insider trading. Heard of Rajat Gupta? Heard of Rajratnam? So I think they are themselves to be blamed. LIBOR fixing by Barclays and 7 other banks. They were charged, slapped with a fine of $400 million. Rouge traders, the banks are supposed to manage risk for others. But here we have banks who are taking enormous risk themselves and putting the system at risk, creating systemic risk. And all the big names, Credit Suisse, UBS, JPMC, okay? 2 years back, on the May 10th, May 6th, there was a flash crash. The Dow Jones went down by 10% in 15 minutes, and then again went up. What was the reason for that? Anybody? Today, the trading is done not by the humans, it's done by computers. These computers sitting in the computer center of NAC and the BAC and NYSE, because they would like to reduce the latency, because they would like to complete the trade in 10 milliseconds. They would like to get the information from the market, react to the information, and complete the trade in 10 milliseconds. And this is happening in India today. 60% of the trading in US is done by algorithmic trading, by high-frequency traders. What business purpose they are serving? It is said that these people are providing liquidity in the market, but when the market crashes, they just vanish. So are they serving providing any economic value to, as an intermediary in this world? Knight Capital. There's a glitch in the trading software. They pumped in some wrong trades and they lost $440 million. This is something which happened a few days back. Must have heard about it. Subprime mortgage crisis, 2007. What happened? Almost 8 million people lost their jobs. The personal savings, the corporate savings were completely lost. And what was wrong here? I think anything which could have gone wrong had gone wrong there. I don't know how to take it. See, having worked in the IT and banking, you know how technically challenged I am. So look at this, the value chain. Right from on the left-hand side, we have the investors going all the way to the borrowers. Today, what happens? When you want to take a bank loan, you just go to HDFC or any other bank, and they write you a mortgage. Today, it's a long chain. There are people who are writing the mortgage. There are people who are distributing the mortgage, people who are taking the loan. These mortgage manufacturers don't keep these mortgages in the balance sheet. They just, they are in a hurry to get rid of it. They just package it, write securities, some credit derivatives, and sell it to the investors. And all across the value chain, they were false. People were borrowing more than they can afford. The personal borrowing went up by almost 60% between 2000 and 2005. When you take a loan, what the bankers look for? They look whether you have capacity to pay, right? Whether you can service the loan. You may have capacity, but you may not have the intent to pay the loan. So they look at your credit history. And beyond that, they look at whether you have, they will take the margin. They will not give you a 100% loan. So they'll give you an 80% loan. In this case, all the three norms were bypassed. The manufacturers were coming with very opaque products. If you don't have credit history, it doesn't matter. If you don't have, there's no need for the margin. If you cannot repay the loan, we will reduce the loan interest rates. So instead of charging 10%, we'll charge you 6% the first 2 years. With the hope that the housing market will appreciate, okay, and the prices will go up. This is very good when the prices are going up. But when the market crashes, there's a complete systemic failure. And that's what happened in the US. Again, the failure on the part of investment bankers. They packaged these mortgages and issued securities which were rated AAA by the credit rating agencies. But when you look at the real scenario, they behaved like junk bonds, junk securities, totally worthless. So what happened to all these people, the sharp quants who really created these credit derivatives, the CDOs and CDS? They just failed. Who are the people who are buying these securities? The investors, the hedge funds, who operate totally outside the legal, outside the regulatory framework. Investment banks. Investment banks are supposed to be managing the risk of their clients. Here they were assuming the risk. The deposit-taking institutions were making huge investments in these credit derivatives. So there were falls all along the place. So it's no surprise that we had the subprime crisis. But what's the life after subprime crisis? I think it's going to be totally different. Banking is not going to be as interesting as it used to be. It's going to be back to boring banking. Okay, back to lending, back to servicing the clients. It will not be as exciting, in terms of doing the proprietary trading and writing some exotic instruments. It will move back. Banks will have to change their operating model. They'll have to move towards less capital-intensive activities. Proprietary trading requires a lot of capital. So we'll see that the investment banking, scope investment banking will shrink. There'll be more opportunities in the fee-based business. There'll be more opportunities for wealth managers, financial advisors, people who are really creating value for the clients. So what does it mean for you as young students? I think don't look for opportunities, I would suggest, in the investment banking space. Look for opportunities in the fee-based business. Try to gain skills in risk management and in compliance. There are several certifications available, like Premia, like FRM. They will add value to your resume. And look for opportunities in the growth, in the growth market. Today, there are hardly any opportunities in US and Europe. If you want to look for the opportunities, look for India, look for Middle East, Africa. This is where the opportunities will come. What are other trends? I think technology is changing. And the banks, the world is becoming totally mobile. As you can see, the movement is from fixed to mobile. The movement is from traditional TVs to internet, the internet TVs, internet-connected IP TVs. No longer people are using DVDs. We are going for podcasts. We are going for downloadable videos. Printed word is becoming obsolete because people are using e-readers and tablets. Instead of traditional mobile phones, Nokia is totally out. Today you buy phones from Samsung and others who really revolutionized the smartphones. So today you're talking about the smartphones. And the banks have to adapt to that. Look at some of the statistics here. It's assumed that by 2014, 1 out of every 2 TVs will be internet connected. People are spending $100 billion every year on these mobile devices. There are 1 billion mobile web users. So there are tremendous opportunities for the bank. Why are these technologies important? I think the shape of banking will be totally different. Today, what happens when you want to deposit a check? You take a deposit slips, go and drop in the drop box. Probably it won't be required. All will be required, you just scan the check and send it to the bank. If you want to buy a mortgage, there's no need to visit the bank. You just put your digital signature on the mortgage. You want to pay for groceries? Don't need to have credit cards or debit cards. Just swing your mobile phone on the point of sale instrument, which will be enabled for near field communication, and the debit will be posted to your account. So the world is changing completely. And the banks and the banking will be totally different as we see today. There are different mobile banking technologies which are competing. We are talking about near field communication, which will be very active and very prevalent. You'll see in the department stores. So no need to carry your debit cards and credit cards and checkbooks and cash. Mobile apps, SMS-based payments, mobile web payments, all these technologies are competing. Why is mobile banking important for the bankers? I think there are a couple of reasons for that. One is that mobile banking is very cost effective. The same transaction, if you do it to the branch, you pay $4. The cost is $4. If it is done through ATM, the cost is 85 cents. The online cost is 17 cents. And the cost through mobile is only 8 cents. So the banks will be highly competitive if they can promote the usage of mobile banking. The cost will go down from $4, the cost at the branch, to 8 cents, the cost through mobile. Even if we assume that all the people are not going to use the mobile and the usage is going to change, the overall impact will be from almost like $2.29 down to $1.30. The cost will be almost half. Even if we assume slightly less usage of the mobile banking. So the cost will be very, very less. That's one reason. Is that the only reason? Anything else? Why do you think mobile banking will change the future banking, as we know it today? How many people in India do you think are having bank accounts? I was reading the statistics. It's less than 30%. 30% people have bank accounts. Okay, but what are they using these accounts for? Are they using it for savings, for deposits? No, they're just using it for collecting government, their pension money. Less than 8% accounts are used for making a saving, transaction. Less than 8%. Less than 2% people have credit cards. Less than 7% people have debit cards. So we're talking about totally underbanked population. See, the people we are seeing here may be overbanked. You must be getting calls every day, 3 calls a day. Sorry, do you want a loan? But they know that you have 50,000 sitting in a savings account. So we are talking about, islands of overbanked population and a mass underbanked population. Okay, with mobile banking, it will be possible to take banking to the remote corners. You must have heard about, the activities which are taking place in remote corners of Africa. In Kenya, M-Pesa initiatives. The banking is taken to the villages, not just the second tier and third tier cities, but to the remote villages. And the same thing is going to happen in India, right? Because if we talk about banking, today, what is the mobile penetration in India? How many mobile phones are there in the market today? How many people are having it? I think, I heard. The TRAI statistics is about 70%. About 750 million people are having mobile phones. According to Gartner, there are about 51% people who are actively using mobile phones. But the financial inclusion is less than 10%. So look at the possibilities. How many people can be serviced through mobile phones? And this is true not just for India, for all the countries. Let me take you to another slide. This is the statistics from MasterCard. And they looked at the mobile readiness for different countries. Here we have 34 countries. And they looked at different parameters in terms of the consumer's readiness. Are people really comfortable using mobiles? Is the infrastructure ready? Is the regulation in place? When I was working with SEBI, 2 years back, I worked on the mobile trading regulation. It came only 2 years back. So you need to have regulation, you need to have infrastructure, you need to have people who are willing to use these technologies. And MasterCard ranked these countries. The top one, no surprise, was Singapore. The second in the list is Canada. Where is India flickering? Can you see India here? India is on the right-hand side, fourth from the top. So probably it's at 21 or something in terms of the mobile readiness. And you see countries like Kenya at number 4. You see countries like Brazil, countries like Nigeria, okay, just after India. So all these countries are ready. So that means you'll see the financial inclusion, the low cost of mobile, the correspondent banking frameworks, all these will change will change banking as we know today. In the previous slide, I talked about Canada being number 2. Okay, today I think, it's one thing to have the infrastructure in place. Second is to make use of that. And I think Canada is one country which is probably using the mobile banking to the maximum. The government has decided to phase out checks. In 2 years, there will not be any physical check in Canada. No physical check. They will save about $32 billion, 2% of the GDP, by getting rid of the checks and having some efficient payment mechanisms. Look at the bottom part here. The online banking, it took 4 years for online banking to really become operational. In case of mobile banking, it takes only 14 months. In 2011, there were the payment transfers through mobile banking were about $250 billion. $250 billion US dollars payments were transacted through mobiles. In a few years, it's going to be $670 million. $670 billion. More than 70% Canadians are ready to go cashless. So that's the model we're looking at. Okay, what is possible? What's the possibility of mobile banking? The different players in the mobile banking, you'll see that they are mobile carriers, financial institutions, merchants, they are handset manufacturers, credit card companies, application providers, and all these players need to be ready. Today, the readiness level is anywhere between 8% to 22%. So they need to be ready, and they should be able to service the clients. So I think the readiness is still, catching up, and the fight is going on. There's no clear winner. Banks would like to take the lead in the mobile banking. But there are players like Bharti, there are players like Idea who would like to become a bank. Today, I work for IBM. IBM services their clients. IBM is bigger than many banks. Do you know that? Today, Walmart extends credit to its clients. It's bigger than many other banks. So the competition can come from anywhere. And mobile banking is one area where Google is trying to take the lead. In my glasses. Yep. So if you look at the way the social media is being used today by banks and by different organizations, they're using it for branding, for marketing purposes, they're using it for PR activities. Some of them are waking up to use it for customer service and support. They're using it for customer acquisition, employee collaboration. Okay, but still, it's very, very early stages. And the banks are trying to find out how to make use of it. Let's look at the acceptance of different media by the banks. The top one is social networking sites. Banks are present on 79% presence over there. On the left-hand side, we have media sharing sites like YouTube, microbloggings, Wikis, the major blogging sites, the social networking, social review sites. There are several sites where you can give your feedback on different products and different companies. Very few companies, only 38% companies are present there. So all the companies, all the banks are looking at how to increase their presence in social media, how to make use of it. Today, jury is still out. They don't know how to make use of it, but they still want to have their presence over there because they don't want to miss the bus. So today, if you look at the companies, their objective is to avoid being perceived as out of touch. They're not using the social media at this point in time. But if you look at the customers, they're using the social media very effectively. They want services, they want things like coupons, they want recommendation from their friends. So there's more acceptance of social media from the customers, but the organizations, the banks are still trying to adapt to it. What is the challenge for the banks? I think they have to use social media as another channel. It is like the branch, it's like mobile, it's like the ATMs. So they have to make sure that the clients, their customers get the right choice. They can do what they want, where they want to do it. They have consistency of experience. When they go from ATMs to mobile to social media, it should be totally seamless. The context should be maintained. The continuity should be maintained. So social media is one area where there are a lot of possibilities, not just for the banks, but for any organization. Today, organizations are using social media to look for the top talent. There's a tremendous scope in HR field. There's tremendous scope in marketing. Many of you must have used LinkedIn. Have you? It's used very effectively by the HR people. Today, it's going one step forward. There are organizations which are, when they have a job posting, they scan LinkedIn and forward the names to their employees. So if I'm on LinkedIn, if I have 400 contacts, in the job opening in IBM, they will scan all those 400, of my contacts, the direct contacts and the indirect contacts, and then send me a mail saying that, hey Anil, these are 4 guys who probably meet our job requirements. Because they would like internal referrals. Because internal referral works much better. In IBM, we have 40% internal referrals. 40% lateral hiring is done through internal referrals. My next topic is about the customer analytics. Is that topic covered in your curriculum here, the customer analytics? Yes, no, I hear both. Then actually reach out to your directors and your faculty here and make sure that the customer analytics covered here. Okay, because this is one topic which is in demand. And what is meant by customer analytics? This is a survey which was done by, the survey which you see here is done by IBM Institute for Business Value. Today, the CEOs are saying that what is most important to them is getting close to the customers. Getting insights and intelligence in terms of who are their clients, what do they want, how do they want to be serviced. So getting to know about your clients, being close to your customers is very, very important. And the customer analytics can help you there. Customer analytics is about understanding and anticipating your customer needs, changing your business models to service them, having the right products to sell your customers, and service them flawlessly. Right? Today, see, whenever I go to my savings account is with HDFC Bank. Okay? When I have to use the ATM, typically what happens, I park my car in the no parking zone and rush to the ATM. And I'm always looking back, if my car getting towed or not. And earlier it used to take me about 3 minutes to complete the ATM transaction. So many months back when I found that they have, customized my withdrawal. They're saying that instead of giving me all the options, you want this money from this account and all, they said, do you want to withdraw 8,000 rupees with receipt? I said, yes. My transaction was completed in half a minute. But then I realized it can be even better, It's not that I always withdraw 8,000 rupees. Beginning of the month, probably I need to withdraw 15,000. Towards the end of the month, I need to withdraw only 2,000. If I go to a lonely place in the night, I withdraw only 500 rupees to pay to the cab. So if the bank can use customer analytics to understand what is my withdrawal pattern, it will be much better for me. Right? Many of you must be going to KP, for having Chinese dinner or something, okay? How nice it will be that, you have Chinese dinner at Koregaon Park, you come out, immediately you get a SMS saying that, hey, guess what? You get 20% discount at Coffee Day, which is nearby, just 2 blocks away. Today what happens in the day, I get 3 calls every day, banks asking me for the loan. And they know I have 50,000 rupees sitting in my savings account. They know that very well. So they're not using the data. There's tremendous data which is available, but the banks are waking up to the possibilities. And the customer analytics is something which will make it happen. It's happening in some areas of the banking. It's happening, for instance, in investment banking. It's happening in India also. I was talking to one brokerage firm, SMC Global, based in Delhi last week. They have a software which can look at the unstructured data and find out and make predictions about the market mood, make predictions about the stocks. It can make predictions that today the auto sector will do better, Tata Motors should go up by 2%. So they have the software which can deal with the structured data, which can deal with the unstructured data and make predictions. So it's happening in some parts of the bank, but it's not happening in the the good old boring areas of banking, like customer service, like, advisory service, the savings account. But there are big possibilities and banks are waking up to it. And this is one of the key areas, for IBM. Today, we are making huge, putting huge focus on smarter commerce, customer analytics, cross-channel integration. So the customer, can go from ATMs to social media or anywhere else, and he'll have the same experience. Today, the challenge is to deal with structured data, which could be numeric, text, image, audio, video, but more importantly, how to deal with the unstructured data, right? And that is something which is possible with the technology today. You can deal with unstructured data. You can deal with, so today, it is possible that you have the analytics software which can do the web crawling, which will go to different social media sites and pick up the complete background, complete digital profile of any individual. Kind of scary, right? What you share with your friends, okay, can be picked up by some software. And this is something which is going to be used by the organizations going forward. They're going to look at the social media, they're going to look at different structured data to find out the background of the employees. What are they doing? What are they sharing? What are their thoughts? So it will no longer be based upon half an hour psychometric test. It won't be based upon the aptitude test. It will be based upon the complete profiling of the individual. Today we are talking about, 5 years, 10 years back, the focus of analytics was in terms of the past. What happened? What happened? How many, how often, where? But the hindsight is always 20/20, right? You can look at the past, and if you want to make predictions about future, the possibility, good possibilities, it will not come true. So today, organizations are doing predictive analytics. They are doing simulation. What can happen? They're doing forecasting. If it happens, what will happen to my business? And they're doing modeling. They're saying, if these are the 7 possibilities, these are 4 possibilities, how these possibilities are going to affect my business. So the focus today is on simulation, on forecasting, on modeling. And this is something, as a management student, I think all of you need to be aware of, especially people who are in finance, people who are in marketing. Okay? And tomorrow, few years later, I think the focus will be on the prescriptive analytics, not just in terms of simulation, but in terms of giving the optimized solutions. My last slide, which is in terms of the possibilities of analytics. 3 key areas of focus here. Customer insight. You can understand who's your customer, gain deep insights. Creating a customer value strategy in terms of what your customers want, how they want. And finally, looking at the customer and partner engagement. What should be a service model? What should be a business delivery model? So these are some of the trends, I talked in the context of banking. I think they're equally applicable for any industry. So what's the first topic I covered today? One person, so I can hear. So that means first 3 slides you people are sleeping, huh? First 3 slides I talked about regulation and compliance. No, before that I talked about regulation, right? Yeah, so regulation is very important. Regulation is going to be very important. The reputational risk can make or break an organization. Today, the organization is very careful about their image on the social media, because social media is always connected. It's always instantaneous reaction. So all these organizations are very careful about what is happening, what people are talking about themselves, about them in the social media. Okay, so the reputational risk is very important for any organization. Regulation, compliance is going to be very important. We are going to have a situation where we'll have Jago Grahak scenario, right? We'll have investor activisms. So no longer, companies can pass resolutions, in a remote place. There are organizations today in India which are trying to mobilize retail investors. So the first key change will be in the area of regulation, compliance, activism. And any organization today needs to be aware of that. The second topic I talked about was mobile banking, right? And mobile banking is going to change the world, especially the banking world. for two reasons. One is that it's very cost effective. It costs only 8 cents as against $4 in the branch. And secondly, the financial inclusion. 70% of the people in India have mobile as against the banking penetration of 8%. Okay, so you can reach out to a lot more people, and with the initiatives like the Aadhaar and the correspondent banking, the banks will be able to service remote areas anywhere in the country. The third topic I talked about was social media, right? Which is about blogs, microblogs, and today we don't know. Today the organization is not sure how to use that. But something which is going to be used very heavily by organizations for servicing their clients, to understanding their clients' needs, by HR people to find the right employees, okay, future employees. And the last one is the customer analytics. Okay, you have to make sure that you have some courses towards customer analytics, okay, courses which can help you in terms of simulation, deal with the unstructured data, get better insights into the customers and their needs. All right. Thank you for your time.